Alrighty, so okay, check. All right, I'm here today with Ani Lika from one of the big five banks. And we're going to just chat a little bit about what you can expect and what we've been seeing in terms of changes since COVID-19 has come to town. So Ani, I wanted to ask you a few things. What have you seen in terms of changes in the, say, application process since COVID started?
So, as we can all appreciate, things have changed drastically. A lot of people are laid off, and it may not be permanent, but for now, temporarily, they are laid off and on EI. Banks do not look at that as earned income. Therefore, they're not going to lend if you're on EI currently. Other things you need to keep in mind is that if you are in an essential service and still working, even though they're still lending, they are still going to be a little bit more stringent on certain things right now, just to kind of make sure that people are going to continue working. Because if we're using income from somebody from, let's say, 2 years ago, well, we know that the future may change. So we cannot base future earnings on what has happened in historical years, due to the fact that we don't know where this is going to land us. So we have to be careful with that. Other things that we need to consider is if you're getting those deferrals and all of these, little things that the bank is offering right now. A, you're paying interest to do these things, but B, consider that if you're in the future looking to refinance, buy a home, or look at any of these things, they're going to look at that and they're going to say, listen, you got a 6-month deferral. Why were you not able to continue, keeping up with your debt load due to this? So why would we lend you more in the future if this is what's going to happen, right? So you have to really consider these things, that if you are getting these deferrals, getting all of these programs and pushing payments, those are going to show up somewhere, right? And they're not going to say that, hey, we don't want to deal with you, but they are going to say that in the future they might be a little bit, more speculative of how you've done your historical finances.
Okay. Now, speaking of deferrals, does that affect people's credit? I get that question a lot.
It doesn't affect people's credit, but as what I just said, it could impact a decision because of you doing that, right? But it's not going to be, I don't think it's going to impact your credit score per se.
Right. Got it. And I've heard that people should be pulling, it might take 30 days to show up, but if they are opting for the deferral because they need it, that they should probably check their credit bureaus in, say, 30 to 60 days, just to make sure that there's nothing showing up on their credit, and maybe check with their lender and get that assurance.
That's right. Because you know what? It is so new. It is so fresh. And at the end of the day, a lot of these people that are getting deferrals, they are going to have to pay these at some point. And if they cannot, then that is going to affect your credit, right? So we have to think about that. It's not a pause in many cases. Many cases, it's not like you're starting off right where you left off.
Right.
You have
and
more owing at that point.
Right. And the interest keeps
keeps going. Yeah.
Right.
That's right.
What's happening in the market when it comes to interest rates? What are you seeing?
Well, it's going up and down and down and down and up and up. So we inched a little bit over to the 2.9 something percentage for a while, but now we're back. Like, we can do insured mortgages at 2.39% for a 5-year fix. And you know what? Other lenders may be able to do it for less. I don't know. But what I'm trying to say is that rates are very, very, very low. I don't know how low they can go. I know there's people in variables right now that are laughing because they're prime minus something, right? And we know the prime rate is so low. So even being 0.7 below that or 0.8 below that, you are in a really good spot right now, right? Interest wise. So what do I think? There's always the ebbs and flows of what happens in rates, and the beauty is most of us can save a rate for 120 days. So there's no harm if you're looking at buying in the next 4 to 6 months or 2 to 6 months or whatever from now on, to keep saving a rate, because it doesn't really cost you anything.
Yeah. And for clients of mine watching this, feel free to, give me a call and I can get you in touch with Ani or somebody. Always recommend a mortgage specialist or a mortgage broker. Don't please just walk into your bank and get somebody, sorry, children. Get somebody just behind the desk. We want somebody that specializes in mortgages and they can do the rate holds and ensure you're going to get the very, very best possible rates.
Right.
So one thing I wanted to talk about is if somebody's unemployed right now and their mortgage is coming up for renewal, what are you recommending?
So if you're unemployed right now and your mortgage is coming up for renewal and you have to do something, right? Do it. Where I work, you don't have to provide any sort of paperwork to get renewed. Nothing in that has changed yet. So the thing is that whoever you're with may know this, or, then the rate game is not as favorable or as fun as you could say, right? Because if they know you're not going anywhere, you maybe want to be careful with how you position yourself, because you want to get the best rate, but at the same time, if you're not working right now, you're not going to get refinanced anywhere.
Yeah. So you might be in a position where you just stick it out. Maybe don't sign for so long if you know that your job's coming back.
Short term, there's 6 months. I don't recommend a 1-year open. They're always really high rates, but I mean, variables, there's lots of options out there. So,
Okay, so due to the drastic drop in interest rates, what should people be aware of if they're selling and then not buying regarding any penalties?
So I've had a few instances right now.
Big five.
Yes, a few instances where a lot of clients are quite upset because they are selling right now, but they locked in about 2 years ago or 3 years ago at an interest rate that's above 3%, 3.5%, 3.3%, whatever the case might be. But the crappy thing right now is that there's two types of interest that lenders charge you. It's either 3 months interest or interest rate differential. Interest rate differential means the difference between the rate of when you got it versus what they could essentially sell that mortgage for right now at today's market. And as you can see, they're selling it at less of a 1%. They're losing money. So who are they going to charge for that? They're going to charge the client that walked into this contract and signed for it. This is one thing that I always say, and I'm not a realtor, but as a realtor, when you're looking at selling in these types of times, it could be good to ask them to get a discharge statement, not to show you specifically, but to get it for their own suitability so that they know that they're walking in this with their eyes fully open, because there's nothing worse than going into a contract. You're now in a binding contract, so you cannot back out of that sale and finding out that you have thousands of dollars that you have to pay that you may not have in the equity at these times, right? So there's things to consider.
Yeah, it's definitely, there's a lot to consider right now. And we want to make sure that people are fully educated and know kind of all the ins and outs and the things to consider before they make a choice about what they're going to do.
And keep in mind, things are always changing. Things are going to continue changing. So by the time you hear this from me, it may have changed again. So you need to speak to the people that you trust that are going to keep you up with information, because that's what we're trying to do at this time. But it's a very quick moving processes and how things are changing.
Yeah, absolutely. Very good point.
Yes.
Are banks backing off of rental property right now? How are you finding that for like investors or the forced landlord?
So just keep in mind that rentals are always a higher risk to any lender, because it's not where somebody lays their heads at night. So it's not something that they will fight tooth and nail for to keep their family safe. But that's why there is always things like leverage where they're asking for more down payment, et cetera, et cetera. I do think that they're going to tighten up a little bit. Maybe they're going to want more skin in the game in the form of more down payment. So they're going to lend you less, or they're going to want to see that your rental properties are offsetting their debts at a more comfortable level. And they base that on things like the debt servicing calculation of a property. So it's just kind of like, what is the return on that investment, right? Are you paying out of your pocket to keep it afloat, or is it making you money? Okay, so those types of things they're going to be just a little bit more picky on, I think.
So for those people listening that maybe are speculating on getting into the rental game, because there are a lot of opportunities right now.
Yeah.
As much as we're talking about some of the struggles, there are those people that still have very steady work. And in a situation, what we're dealing with right now, there's a lot of opportunity. And I've had people inquiring about maybe picking up a rental property, their first one or more. Can you just give us very quick, what do people need? So I get the question all the time, how much do I need for a rental property? I've got my primary, what do I need?
So minimum 20%. And then if these rules continue changing or what happens, you're going to need more than that maybe.
Mm.
Now, if there's no rental agreement on that property, how are we going to offset that property, right? So yes, you might have really strong income that holds it down and it's fine, you can pay, but some lenders may not want you to be spending your own income or a big amount of it just to offset a rental property. So are you going to get a renter in place? Does this property already come with a renter? There's lots of things that we can do that maybe we can't speak right now because there's a million different types of ways to do a rental property application. So I'm not going to get into that, but there's definitely opportunity for people that have the credit, have the money, all this kind of stuff. It's not like the banks are closed for business.
Mm-hmm.
Do you understand what I mean? They just want more clarification, and now they have more reason to ask for it.
And this isn't, we've seen in the past, 10, 12 years, the continual tightening of restrictions in lending practices, right? They keep wanting more documentation. They want more information. The lending criteria has changed. So,
but they are also bringing in, like the institution that I work for, they're bringing in a full beginning to end process where we don't have to meet. We can authenticate you over the phone. We can authenticate all your paperwork, even the signing of the documents can be done via e-sign. So, DocuSign that realtors have been using for a long time, the banks have been kind of like standoffish on it because it's, they like to make sure that everything is being done the proper way and there's privacy issues and so forth. But they've come now out with a system where we can do it from beginning to end, just like this.
Yeah. Okay. One more thing. If people can't sell currently, and we're seeing, a fair amount of that just due to the values drops, which unfortunately we would, in the marketplace we'd seen prior to COVID, Alberta's getting hit with like this 1, 2, 3 punch really, of challenges.
Yeah.
Should people be thinking of refinancing in case values drop? And
100%.
they want that equity, and they have, whatever equity they have now, they have a concern that it's going to drop. Is it a time to refinance? What are you seeing?
It's definitely a time to refinance and have that cushion for yourself. I don't think that taking out equity is good for everybody. Not everybody knows how to just sit on a line of credit without using it, right? So it's definitely not a fit for everybody. But I do think that if you are in the future going to require this money for, let's say, sending your kids to school in the next year or two, or anything that is going to cost money and you have the equity in the home, now would be the time. If you're going to do it in a year or two, do it now is what I would recommend, or check into it now. Again, it's not for everybody, and I'll point that out. But there's many ways that you can think about maybe decreasing your monthly costs right now. So if you have a crap load of equity in your home and you're paying 3 loans and credit cards and, they're just like killing you in interest. Yes, this is the way to make yourself, come up on top, right? This is a way to minimize these high interest bearing costs and do it, like substitute it for something that's a lot more simple at a lower rate, and you're amortizing it over 25 years.
Mm-hmm, mm-hmm.
Yeah.
And like you said, the cautionary tale in that is this can be the larger shovel that digs the hole deeper for people. And so again, what we're talking about today is, Annie and I just want to give you some tools, and the tools we offer aren't for everybody, right? So it's finding the right tool for your particular situation that's going to put you in the best financial position.
That's right.
Not to make it worse in, 5 years, because
I don't want to see them in another 5 years in a worse spot than I had seen them 5 years ago, right?
And that's something, people did a lot of that, when the market was nuts, even back in 2008, we saw a pile of that, 2007, right? And people refinanced and then went to sell in 5 years and were upside down. And oftentimes you ask them what they spent that money on, and you get the blank stare of, they don't remember, right? Like it just kind of dissipated. So I do think that this time is having people, reanalyze where they're spending their dollars, being a little bit more mindful about how they're doing it. And again, that's a great tool for some people to get some of that higher interest debt off their plates.
Mm-hmm.
Yeah. Awesome, Annie.
All right.
Anything else you want to tell us?
Just one of the other changes that they're looking into, anybody that, when I was talking about like approving or qualifying for a mortgage, before we used to be able to get away with like a pay stub within 60 days. And now they're wanting it within 14 days. So you can see the decrease in time horizon that they're giving us on things. And again, historical income used to be our whole basis for what we're going to claim as income. And now that field has changed a little bit, and we need to put more food in it for them to basically say, this is how it's going to continue on and why.
Yeah.
So,
and are things taking a bit longer to kind of go through and process?
they are, because everything is going through maybe a couple of eyes versus, just in my opinion, it's not just like one person looking at it. People are just being more cautious.
Got it. Makes sense.
Yeah.
Awesome, Annie. Well, this was great. So yeah, anyone has any further questions, clarifications, or want to talk about their specific situation, because everybody is dealing in such, everyone's got such varying circumstances. Annie or I are happy to chat.
Anytime.
Sorry?
Anytime. I said anytime.
Yeah. Here to help in this totally, unique scenario that we're in.
Yeah.
Awesome. Okay. Thanks, Annie.
Stay safe and sane. Chat later.
Okay. Bye, girl.
Bye.